Discuss mortgage foreclosures in Oregon. To begin with, there are two types of mortgage foreclosure. There's a non-judicial foreclosure, which involves an attorney or a title company acting as trustee. They file documents, generally affidavits, with the county recorder's office to begin the foreclosure and end the foreclosure. It takes about 120 days plus 60 days for mandatory mediation, so the process generally runs about 180 days. On a judicial foreclosure, which is the other type of foreclosure, there's generally an attorney that files documents with the court. Court makes the decision whether or not there's a foreclosure, and the minimum timeline there is approximately 90 days plus the mandatory mediation timeline of another 60 days. But because it's a judicial foreclosure, it's litigation, it can run substantially longer than that. So the way foreclosures start is that the borrower gets in default on the terms of their mortgage and their trust deed. And that can take, the default can take many forms. It can be by a failure to make payments when due. It could be failure to pay county property taxes, failure to maintain appropriate insurance. There's other types of default as well. So once the borrower falls into default, then the lender has the option to begin a foreclosure. However, beginning August 4th, 2013, the Oregon legislature has required that most institutional lenders, larger banks, must go through a mediation process before they file any type of foreclosure. And the banks have been required by the legislature to initiate the mediation process. The state of Oregon then has a contractor that conducts outreach activities to the borrower and asks the borrower if they'd like to participate in the mediation program. If the borrower wants to participate, then there'll be some fees that are associated with it to both parties, and there'll be a mediation session where the borrower and the lender try and work out their differences and perhaps come to a modification that allows the borrower to stay in the home. If that does not work, then the lender is then authorized to begin their foreclosure process. And as we've already discussed, they have two ways to go. They can file a judicial foreclosure with the court, or they can process a non-judicial foreclosure through the county recorder's office. The decision by the lender to take one route or the other often depends on what type of property is being foreclosed. If it's a residential property, a residential trust deed, then that means the lender has no ability to take a deficiency against the borrower. And in those cases, the lender may well move forward with a non-judicial foreclosure. However, if it's a non-residential property, and we'll talk about what is residential and what isn't in a moment, then if the lender proceeds with a judicial foreclosure on a non-residential property and the property sells at sale for less than the amount that's owed to the lender, then the borrower may be subject to a deficiency judgment, which means that the borrower may have to pay the lender the difference between the amount that was owed and what the property actually sold for at the foreclosure sale. Let's talk about what constitutes a residential property. In Oregon, the legislature has recently changed what constitutes a residential property, and now the definition is that if the property involves 4 or fewer residential units, which, and this is important, at the time the default for which foreclosure is made arose, was occupied by the borrower, borrower's spouse, or minor or dependent child, then it is a residential property. So the bottom line is, if it's your house and you live there, then it's a residential property. If it's an apartment complex or a rental property, then it's not a residential property. If it's a property that you lived in at one point in time, but then you vacated, it's going to matter when you stop making your payments. If you stop making your payments before you vacated the property, then it'll be considered residential and not subject to a deficiency. If you stop making your payments after you vacated, then it's likely to be considered non-residential, and you may be subject to a deficiency judgment. So as you can tell, foreclosure law in Oregon is rapidly changing. The legislature is constantly making adjustments to the law. It's complicated, and the penalties to the borrower can be rather severe in terms of a deficiency. If you're a borrower and you're facing foreclosure, you definitely need to consult with an attorney. Similarly, if you're a lender and you're looking at initiating foreclosure, you're also going to need to talk with an experienced foreclosure attorney who's familiar with the most recent changes in Oregon law.